with the euro. Now, monthly chart are in between two monthly zones. We've got a supply area up here, and we've got demand up here. We're likely to see what I would like to see as a long-term trading opportunity is for price to come down here and then push up. The 1.25 area, again, we can play a correction move to the downside, right? So this is likely to happen.
Now we will show you the result of this Euro-USD short trading idea we discussed live in one of our webinars back in December 2017, and why it's still relevant for us to show you a trade idea which we discussed almost 1.5 years back. As you can see, as a wrap up, the yellow zone we identified shows an area where supply exceeds demand. This is exactly the area where our students are taught to short as price comes back into the zone. So our students would have a sell order in place at 1.24456. And now, ever since this supply level was triggered back in 2018, January 2018, we have seen a 10% drop in the Euro-USD. So what does a 17-month investment to the downside, shorting, mean to a proactive investor? As a proactive investor, we calculate our risk to reward ratios. In this particular trade, you can see that for every dollar we risk, our reward is $3. So if you risk $100, you can potentially make $300. So therefore, if you were going to risk $5,000, your reward is $15,000 in pure profit. And likewise, if you then risk $10,000, your reward is $30,000. And $50,000, your reward is $150,000 in pure profit. This we can only achieve through a good risk to reward ratio, which is given in this particular trade. This is a trade which we call wealth trade setup. It's passive income trades that we hold for a very long time, trades that you can use for retirement funds, income, or just wealth in general. But we don't only make money from the price prediction to the downside. No, we also make money from the interest earned in the 17-month holding this trade to the short side, to the downside. So depending on our risk size, we would have made anywhere between $4,043 to $40,439 in just interest by simply holding this specific product, regardless of where it's going to end up in terms of risk to reward ratio. It could be at break even and we would still have interest earned of between $4,000 and $40,000 US roughly. So the total profit as of today, and this trade should still be running because there's further profit potential to the downside. So in 17 months of holding, we would have made a total of $19,000 and $43.92 by simply risking $5,000. Now a question to you. For your retirement fund, would you risk $10,000 to gain $38,087.85 17 months down the road? Or even would you be risking $50,000 to gain $190,000 and $439.20 17 months down the road? So this is a passive wealth trade idea, trades that we hold for a very, very long time. We have identified this trade back in December 2017. It was triggered in January 2018, and ever since we've been shorting and holding on to our short, and we will still hold on for quite some time.